I've been buying commodities. I've also been buying into the travel sector. Not just that, I've been dollar cost averaging to Chinese tech and also into Ethereum. So if your question is, Josh has bought quite a few things, what exactly is in his portfolio? Could you pick an idea or two for yourself? If this has been a question you're thinking of, this video is for you. Hi guys, welcome back. I prepared this whole breakdown after looking through the various portfolios that I have. And inside each portfolio, there are usually some that belong to different classes, such as in REITs or such as in Chinese tech. I've actually grouped them up to give a total percentage in terms of the overall weight in the portfolio itself. So without further ado, let's start with the one that has the least allocation, and that is actually surprisingly Chinese tech. As of right now, Chinese tech is only about 4.1% in my portfolio. I previously already owned JPMorgan China A fund, which in my opinion is one of the better run unit trust funds allocated towards Chinese equity. I've also dollar cost averaged into two SYFE China portfolios. The first one is 50 weeks of $1,000. The second one is $2,000 for 10 weeks. The second one recently ended. So as of now, the total value of all Chinese exposure is 4.1% of my total portfolio. Of course, it's currently looking a bit small because there's still ongoing dollar cost averaging and that prices has dropped a bit. It is as of right now the only place that I'm still dollar cost averaging since it's a bear market. So with that ironed out, let's move on to the second asset class that I have in my portfolio. Before we get there, if you have any questions along the way, do leave them in the comment sections. And as always, this is not financial advice. This is just my own portfolio because I have a different risk appetite from you. And the reason I conceal the absolute amount is because I don't want to create a direct recommendation and I don't want to create that fear of missing out. So with that ironed out, let's move on to the second in the list, which is actually into bonds. Currently, the total bond weightage in my overall portfolio is only 5.8%. Now, previously I had more than 100,000 allocated towards bond funds. I've withdrew some of them and I've deployed some of my excess cash. That's why this bond allocation looks a bit small right now at 5.8% only. That in many ways it's my remaining ammunition just in case there are opportunities in the market, but I've actually deployed them quite a bit already. So you can imagine a lot of my empty bullets, I fired them off. I'm awaiting new income to continue to purchase and build up my own portfolio. Within this bonds asset class, there are bond funds, there are also retail bonds. The retail bond I have is SIA retail bond. So personally, I actually have that as part of my emergency cash. Let's move on to the third on today's list, which is global and Asian equities. The total allocated towards global and Asian equities is only 10.1%. That includes US equities. And almost everything I have in terms of US equity is via funds. The total weight towards Asian equity funds are even bigger than US equity funds. So you can feel where I'm actually leaning towards. And with that, let's move on to the fourth on today's list, which is actually cryptocurrency coins. If you have benefited, help me smash the like button so you can reach a wider audience together. And if you're always keen on financial topics, do smash or subscribe because I'll be releasing ideas that can help you in your retirement journey as well as your investment thinking process. So the fourth item on today's list is actually cryptocurrency coins, and that constitutes 12% of my total portfolio. What I can share is that previously I did a 3,500 per week into CoinHeckle to do a dollar cost averaging into Ethereum. However, I've actually changed my dollar cost averaging into GEMINI, and for 8 weeks I actually contributed 3,600 to try to buy one coin. And the idea for using GEMINI is so that it can transfer freely to HODLNAUT, which is a staking platform. And the free transfer is actually an idea from Kelvin. So I think I haven't thanked Kelvin for it. But it is indeed true that when you transfer from GEMINI, it's free of charge. I've completed my whole dollar cost averaging into Ethereum coins already. And when I look back at the journey, I bought a total of 10 more Ethereum coins at about 3,800 Sing dollar per coin. Ethereum coins were really volatile. But right now, things look a bit rosy because when I'm filming this, Ethereum coin is now 4,600 already. So if you have gotten some Ethereum coins for yourself, maybe you have benefited also, and do always look long term because there are big developments coming up on the Ethereum blockchain itself. Number 5 on today's list, which is the third biggest allocation I have within my entire portfolio, is into REITs. I've actually done a previous video that REITs is good as an inflation hedge, and indeed, REIT prices look to be increasing. Within my entire REIT portfolio, you would see Ascott REIT, which is something I've shared before as my top dividend counter for 2022. You also see SYFE REIT Plus portfolios. I've actually two of them, both the SYFE REIT 100% as well as the SYFE REIT Plus with risk management. Having looked at the portfolios, I do think now that I'll much rather everything be in the SYFE REIT Plus portfolio, 100% into REITs. So that if REITs do indeed recover well, that could benefit a bit better. So if you're keen to find out more on REITs and SYFE REIT Plus, do smash the subscribe. I have something coming up quite soon on it. The entire REIT allocation I have is right now standing at 12.7%. The second biggest allocation I have in my portfolio is Singapore stocks. Curious, correct? Why Singapore stocks and not US stocks? I'm happy with Singapore stocks. I think I know how to curate good stock investment ideas. If not, I won't have anything to teach on my investment course. So whether it's Singapore stock or US stock, the fundamentals and the way to curate is the same. I have some names I've been tracking for a while and I do know how to read their annual reports quite easily. So let me share with you a little bit more detail on the Singapore stocks that I have. Right now in CDP, there are 8 names. And I've actually sold away my STI ETF. You know, in a previous video, I did mention before, that was back in COVID-19 crisis, that I wouldn't sell my STI ETF unless it hits $4. But actually around the 330 part, I did actually cash everything out. Simply because I had to cannibalize something to deploy more towards an area that I'm very keen in, which is going to be the number 1 on today's allocation. So STI index actually rewarded me quite big because I actually purchased a large part of it during the March 2020 downturn. So everything I have, which is 25.5%, is fully into stocks right now. And some of the expected names are videos that I've covered before on this channel. So without further ado, let me introduce the one that I've allocated the most. 29.8%. If you've been following this channel, you kind of already know the answer. Or if you don't know the answer yet, that means you haven't seen some of my tutorials I've done previously. This sector is in commodities. I've actually accumulated 29.8%. And you know, this whole audit process is good also because 29.8% was not an amount that I was targeting. Some prices appreciated, but this is a sector that's ultimately volatile and only for this extreme period. Because even though commodities have served me very well, as you can see in this portfolio outperformance over Nasdaq, I also have to practice what I preach, which is to not be overconfident. Because ultimately, when it comes to investing, you're investing for your own and your family's financial future. So being prudent and being patient is still ultimately very important. So if you have stayed to here, my suggestion today is to also look at your portfolio. Look at where you have allocated, look at where it's done well, where it's not done well, and think very carefully, are you able to withstand the next market volatility? Hopefully this has been a useful discussion, and as always, leave your comments below, smash the like button, and I'll see you in the next video. Take care and goodbye.